सब सहे मस्त रहे।
Very good afternoon and welcome to CNBC TV18's latest offering, Get Rich. I think amongst us, Mangalam, we've all got nifty millionaires. So the question is, have you guys become billionaires yet? We have the nifty at record highs, 9,200. So tell me, who's captured this big market rally? Raise your hands.
Okay, we have one gentleman out there. But you know,
I think someone was hesitantly raising their hand somewhere there.
Come on, you guys can raise your hands. We won't tell anyone if you have made the money.
Even the IT department, so...
Also, it's interesting to see so many people in a college on a Saturday, actually, you know. But, you know, the Nifty is at record highs, 9,000. My mind goes back to 2 years ago, March 4, 2015, where we were at 9,000 as well. After that, you know, we had the massive fall and then the massive resurrection on the Nifty. Not to suggest anything of that sort is going to happen, but keep in mind, give and take everything. If you stuck to good quality stocks, you had the likes of Eicher Motors, you had Maruti, Yes Bank, all of them gave you 76%, 70 to 75% returns over the last 2 years. Whereas if you were stuck in the likes of BHEL and Idea, remember both of them are at 52-week high, but still down almost 30% from the last 2 years. So the idea is to try and maximize the winners and try and minimize the losers, and that is what CNBC TV18's Get Rich is all about, right?
Yes, indeed. But I think, you know, last week was, of course, phenomenal for our markets. Right. We had the benefit of the landslide victory by the BJP in Uttar Pradesh. There was progress on GST. The Fed raised hikes, but, you know, he sounded a bit he sounded less hawkish than what the market was expecting. So last week was great. But, you know, the way we opened at record levels, but, you know, gave up ground from the high point of the day, raises questions that from here on, what happens? You know, is this the euphoric bull run that we experienced from 2005 to 2008, or is this time something different? I think that's the question, given the way last week we moved, is the question everyone's going to be asking. And going ahead, we don't have that many triggers as well. So we'll be back to tracking the earnings now. GST, yes, there's progress, but there is still the fitment of, you know, which goods, which service comes in which bracket, which tax slab. We don't know yet the full impact of demonetization. So I'm saying the upside triggers from here on, we'll have to wait by. Last week we got a whole lot of them, so let's see what lies in store. But I guess whether this rally continues, what are the quality stocks you need to pick from here, that's not the answer we're going to give. We've got three wise men joining us today. So first, let me quickly introduce them. We have Arun Thukral, we have Amisha Vora, and Prakash Diwan. So thank you, ladies and gentlemen, for coming to us this Saturday morning. So let's get the first wise man on the stage. Arun Thukral, the MD and CEO of Axis Securities. He's got more than 2 decades of experience in the financial markets. A big round of applause for him.
I think the theme is very good. How to get rich. No beating around the bush. Just tell us how to become rich. How to create wealth. So I think 2 ways you can create wealth. One, you invest in your career. You have a day job. You work for a company. You work for a bank. You have your own business. So you are putting your labor there. You are putting your own efforts there. So that is one way to become rich. We are not going to talk about that. The second is, whatever money you are saving, you are investing. So your money is working for you. I think we are going to talk about that. Within that also, either you are investing in physical assets, which is real estate, gold, and the second is financial assets. So today I personally feel that financial asset is the key, and we are going to talk more about financial assets, and within that we are going to talk about stock markets, we are going to talk about equity market. For that, what we should know, we should first look at India as an investment destination, because we are going to invest money in Indian equities, how India is looking, and then within India, what sectors, what are the opportunities, we have to get into that. So I think I'm starting with demonetization. Why? Because first time we have seen that the government has taken an economic bet and has been rewarded. So if you look at the UP election results and the kind of mandate government got, I think that is the proof that now people are going to reward if you talk economic sense, if you talk development, which is a great news for the country, which is a great news for the markets. So there was a parallel economy. So part of that has come into the organized market. There are more people who will be paying taxes. So all those organized and listed players will get stronger because some of the inefficient players will go out. That will help the stock market. Another problem for all these years was that government was not able to identify the poor. If they wanted to give subsidies, most of that was getting leaked. It was not reaching to the intended beneficiary. So government talked about digitizing the IDs, which is Aadhaar. So today more than 111 crore people have got the Aadhaar cards. That coupled with the mobile revolution and finally Jan Dhan account, financial inclusion, that money is now going to the beneficiary and that too in his or her bank account. The money which was first, it was not reaching to them, and second, even if it was reaching, they were not able to spend it wisely. They were immediately spending it, some consumption, keeping under their pillow, doing all kind of things. Now that money is sitting in a bank account and thousands of crores of rupees are already there. So at some point of time, that money will flow into equity market, maybe in small SIPs. It will take some time, but we are going there. Government is taking many steps to ease the business community, to ease the processes, to get them the benefit of faster implementation. So we have improved on this ease of doing business index, although a little bit. There is another index called cost, the competitiveness, where we have inched much higher. So there are a lot of efforts being done. And finally, GST, which is the reform of the decade. There are 13 taxes which will go. There will be a single tax from 1st July. So you will not see the lines at the check nakas. Earlier 30 to 40% of the time people were spending at the check naka and not driving the trucks, the drivers. So what is happening around the world? See, whatever affects our market, we have to look at that. The other countries are being protectionist. There is a lot of protectionism in the world. We saw what happened in Brexit. They wanted to save their jobs. Their immigration laws are already very strict. Then we saw what happened in US. Hire American, buy American, and whole lot of things are happening. Our IT sector is worried. Our pharma sector is worried. So all those worries are there. And that may happen in France also. We don't know. There are elections in next month, April or May, first week. So I think world is getting into that kind of a mode. What we have to look at, what India is doing. In India, it is the reverse process. We are inviting people. We are saying, come here and manufacture. So it is becoming a global hub for autos. We are going to manufacture our defense things here. So we are welcoming. There is a huge focus on infrastructure. If you look at the kind of allocation, around 4 lakh crore in this budget, Out of that, 1.5 lakh crore for railways, some 60,000 crore for NHAI, building roads. There will be more airports, more bridges, more seaports. So I think all that is happening. So that will give you a lot of opportunities in many companies who are getting into these things. Then there is a digitization push. We have all seen. Demonetization accelerated that push. So we could see during that time that even a fruit vendor had a Paytm board. Most people use the cards. And even now the remonetization has happened. People are very comfortable using debit card, credit card, UPI, Paytm. So all this is happening. So that's a great story. And we will see the benefit over a long period of time. Look at macros. We are the fastest growing country in the world. In spite of whatever happened in Q3, everybody was worried and we got a GDP number of 7. Once the GST is implemented, so what we have seen across the world, wherever GST is implemented, after 1 or 2 years, the GDP has gone up by 100-150 basis points. So we are inching towards a double-digit number as far as the growth is concerned. So that will obviously open many doors for us. If you look at India's forex reserves, so in 91 we had 1 week of import money left, and now we have 10 months of import money that you can pay the bills for the next 10 months. So around $360 billion reserves. If you look at fiscal deficit, it is under control. Government is working prudently. The NK Singh committee gave them some leeway between 3 to 3.5, so around 3.2. FIIs are happy, rating agencies are happy if we maintain that. If you look at CPI, very much under control. So we never talked about 3%, 3.5%, 3.85% number, but now that is happening. There may be base effect, it may move to 4.5 or whatever, but it is under control. So nothing to worry. Apart from that, if you look at crude oil, under control. If you look at interest rates going down. So I think this is another story which is playing in India. We are going to get a demographic dividend in this country. There are only 6% people who are above 65 years of age. And there are 29% of the people which are below 14 years. There is no other country in the world this kind of demographics. So next 2 decades belong to India. Next 2 decades we will have the most productive population in the country. I think after 5 years the average age of Indian will be, let's say, 29 years, and average age of Chinese will be 37 years, and average age of a Japanese will be 48 years. So just look at the benefit. How it is going to benefit. These people are going to consume, these people are going to take loans. So there are 70 crore rural consumers in India. There are 6.5 lakh villages in India, and there are 70 crore rural consumers, which is equivalent to the entire Europe population. There are 50 crore, that is another cut. There is a 50 crore young consumers. If you add Brazil, Russia, Germany, UK, all these 4 countries. So these young people nowadays, if you look at a millennial, they want to buy a home immediately. Borrowing is not a taboo. Day one, they take a credit card and start spending. So they are going to spend money, they are going to take loans, they are going to consume things. So I think this is huge opportunity. So we have to look at entire spectrum. If you have to become rich, you should know where the people going to spend money. And then there is a middle class consumer who is starting his family or started his family. So there will be money spent on education, there will be money spent on insurance, because suddenly you find the need to go for insurance. So insurance companies are going to benefit. And these people are sorted, they don't have much debt. Again, they are going to spend more. So if you look at the discretionary spend on food, on healthcare, on other things. So I think this is another slide which should be seen very properly. So if you look at roadways, we have only 21,000 kilometers. Look at US and look at China. So they are 4 times far, 5 times more than you. So look at the opportunity. What I am trying to tell you, look at the opportunity, because we are the fastest growing, we are doing well. And if we have to reach somewhere close to them, how many companies are going to benefit? Because there will be corporates who will be doing this. So there are motor vehicles which is 18 per 1,000, and look at China, and don't even look at US, 44 times. So let us go towards China first. So still with this kind of vehicle, we had traffic jams everywhere. So we have to build more roads. So there is going to be more money spent on infra. So there are two stories. You are going to get money in the auto sector, and you are going to get money in the road sector or infrastructure. Number of airports, again, huge disparity. Waterways. So I think we can go on and on this kind of parameters. So these are only 4 I thought I should select and show it to you. So infrastructure, there is a huge rise in award. NHAI is getting, so its graph is going up. So if you look at the road being built every day, so it is, I think 19, it is written here, but latest data is 22 kilometer of road being built every day. Highways, huge opportunity. Defense, we are importing around 60% of our requirement. I think it should halve in the next 5 years. So again, that means more company. So you know the companies, maybe when you read every day, you know which company is doing what. So, but look at the overall opportunity size here. FMCG, again, the same story. Your per capita income is growing, more and more people are going to spend money, and the rural is a major base here. So there are ultra rich, obviously, but consumption story will be primarily middle class, rural class. So you know, again, you know the companies. So you start observing which companies oil people are using, which companies biscuit you are eating, which companies soap you are using. So you know what is happening around you. So there are huge opportunity in FMCG and consumer durable. Housing finance company. Again, I think everybody is talking about this. These companies have rewarded so well. Look at the shortage, around 4.4 crore in rural housing and around 2 crore in urban housing. And we are talking about housing for all in 2022. And if you look at the overall book of the banks, it is 10-12% in lower digits. So there is a huge scope. So infra is going to benefit within that. All these companies also will get benefit. So see the related companies, even the cement companies will benefit. So if this is going to be built, there are going to be huge opportunities. So many of the housing companies have already started rallying, and in the coming years it will continue to happen. Auto ancillary is a great story. So in India we always talked about, if you talked about export opportunities, primarily IT and pharma. So IT exports around 65% of the total whatever they produce or whatever is the total sales. If you look at pharma, it is around 35%, which is export. If you look at auto, it is right now at around 15%. But I think here is a great story, because we have reached a stage where the quality and efficiency of Indian auto industry is well accepted. So more and more global auto majors, they are setting up hubs in India now. So last year around 2.5 crore cars were made. Out of that around 15-20% were exported. So small car market, we are exploding. We are sending to so many nations now. And all the auto ancillaries companies also benefit, because auto ancillary companies have benefit. They also supply to export market. So all those Hondas and Fords which are not listed in India, and they supply to your Marutis and other companies which are listed in India. So they have the twin advantage. So these companies are going to benefit more than the OEM, what we call. So ancillaries, even we are more bullish. So there are a lot of opportunities. So in auto ancillaries, there are companies specializing in lights, specializing in engines, specializing in brakes, specializing in, there are 5-6 kind of different niche products. And these companies have market share of 40%, 50%. And I think we have huge story there. Then textile industry. I think this is what we have started talking at AxisDirect now. What we are saying is that if you look at China, which is the leader as of now, the exports are falling in the last 2-3 years, because the wages have been increased in the last 2 years. If you look at the labor cost there, so there is a huge differential being built if you look at India and China. Whether you look at even other factors like power and lending rate and water cost. So we are going to get a huge opportunity in textile, and we can see the green shoots. Because this textile business is moving from different contingent. If 1950s it was Northern America, then it went to Japan, then it went to Hong Kong, then it came to China from 90s onwards. And now, if you look at their negative trend, so India is going to benefit. Although there are other countries like Bangladesh, Cambodia, Vietnam, but obviously the quality issues may be there, and the comfort level of European companies and American companies will be more with the Indian companies. So I think we are going to benefit more, and we are very, very positive, and there are very few companies here who are integrated. So we are not talking about the branded products, the companies who are setting up retail showrooms. We are talking about before that, because there is a stage when the cotton fiber becomes yarn, become grey fiber, become processed, and then finally it become a garment. That entire chain, that integrated players are there. There are players in parts of Coimbatore and Tirupati and all that. And these companies are going to benefit hugely, because if you start around $1.50 if you are investing, and the garment when it comes, it is around $11 or $12. So the kind of margin these people generate, I think there is a story. Not because then people set up retail and all, then sometime they lose money. So we have lot of spaces here. Now, before I start that, so what I'm saying is there are lot of opportunities. Still in India, only 3% of the people invest money in equity. So I keep wondering why people don't invest in equity. When we have seen 1978, the index was 100, now it is 29,000 or 30,000 almost, 300 times. Why people are still getting attached to other asset classes which are not productive. So somewhere it has to do with our own psyche, our own psychology. So I always talk about investor psychology. So I am going to give you 5 principles, and I am going to take help from yoga. And this is going to be my last slide. But keep it with you. Maybe you can forget about sectors and stocks. I have not spoken. So, because these things can keep changing. After 5 years, some other sector will come and something else will come. But these 5 principles will not only help you in your day-to-day life, but also in your investing life. And this is a shlok from Patanjali, from Yoga Sutra, which says, Avidya asmita raga dvesha abhinavesha. The first is avidya. That is lack of knowledge or ignorance. So if you don't have knowledge, how are you going to invest money? You have to know. So whatever I told you, all these things, maybe some of you may not be knowing that. Now you know that. So I think this knowledge is going to help. So I think that is the main klesha. So these kleshas you have to minimize. You will not know all, but at least you can minimize your ignorance. So you can know more about companies, read more about sectors, read more about companies. The second is asmita, which is ego. So in all bull markets, people think now there is a new high, so people have made money in the last 5 days or 10 days, and they're saying, no, I can make money. Some of people are saying, chalo, I can retire, and it's so easy to make money, because he invested in 1 or 2 company and that has doubled, or 40%, 30% return he has got. So I think you should never get that. Because one saying I will tell you, just try to understand, the knowledge of your ego is knowledge, and ego of your knowledge is ego. So leave your ego, minimize your ego. If you don't know how to read a balance sheet, go to an expert, ask him. If you don't know what this company is doing, you don't know the business, there are so many financial advisors. Obviously, I will say you can come to AxisDirect, but what I am saying is go to a person who can give you some inputs. There is no shame. Your own money, your hard-earned money you are investing. Just invest, just don't invest on hearsay. That somebody said, ye double ho jayega, aap le lijiye. Don't do that. Third is attachment. This is again, you have to minimize this. Because people have attachment towards their, either an asset class, I would love this real estate, main ye ghar nahi bechunga. So there are problems, stamp duty, there are problem tenant, there are problem about repair, there are problem about when he wants to sell, he will not get a price, but he will never sell that house, and all his entire money he is invested in all houses, and they suffer. So don't do asset allocation. Na? You can have one house, maybe 2 houses, you can't put entire money. People love gold, people love jewelry, they don't want to leave that. They don't look at financial assets. Even within the stock, people love a particular stock. They want to keep that stock. the financials have been bad, the promoters are doing all kind of ulta-pulta things, but this person will not sell that because he loves that stock. We have seen, we every day meet such people. I have seen a company chairman who is not going to demat his physical share because his name was printed there. He has so much attachment with that piece of paper. Unless he demat, how he is going to sell and make money? So attachment, so that's what they say now. That whatever you suffer, the root cause is attachment. So minimize this. At least come out of that attachment and look at other asset classes. The fourth is aversion, which is basically you don't like stock market. You hate stock market. People say, no, share bazaar nahi. Gambling hai. Because somebody has lost money, somebody was always selling in winners and keeping his losers as part of his long-term portfolio. He doesn't like the stock market. So he says, no, stock market se nahi karna hai. And once he lost money in 92, 2000, 2008, never invested again. Please don't do that. And finally, fear. That is fear of loss. 100 will become 90 sometime. You are investing in equity. 100 will become 120. But when it becomes 90, you cry. When it becomes 120, you said, theek hai, I invested, I should get that money. So loss aversion. So I think this is really bad. Equity is a risky asset class. It will never give you linear return. Sometime you will win, sometime you will lose. But if you are winning more than losing, so over a period of time, if somebody has invested only in Nifty or a Sensex, he has got his money 300 times. Over a longer period, you will never lose money in equity. I think these are the Panch Klesha which has been given by Patanjali 2000 years back. So we always look at Warren Buffett, greed and fear is bad and so many things, but our own gurus, our own scripture also talk about these. And these are the 5 things, if you look at any of your problem, you will relate with any of this, one of these 5. So I think keep this principle, be very strong mentally, so that 3% becomes 6%. So 3% of people now invest, now the 6% people should invest, that will be doubling it. So I think I should stop here. Thank you very much, and maybe in the Q&A session we can talk. Thank you.
Thank you so much, Arun, for laying before us the opportunities that lay in India in a tumultuous world and giving us the sectors which are likely to benefit. But what was most enriching was how he connected it with our own philosophy. And also on a lighter note, it was ironic that you spoke about FMCG and connected it to Patanjali in your last segment. But let's move on. Our next guest, you know her as a familiar face on our channel. She's the joint MD of Prabhudas Leeladhar. She's got almost 3 decades of experience in the equities markets and has been awarded by various institutions for her expertise in the expertise markets. Please put your hands together for Amisha Vora, the joint MD of Prabhudas Leeladhar.
Thank you so much. You know, after what Mr. Arun Thukral said, there is very little which is left for me to advise and say. He has covered a lot of things, and it was really very enriching. I will try and focus on 2 things. One is, how do I see what has been happening in India from the point of view straight of the markets, because at these levels, the key fear or key question everyone has is the fear of height, the fear of new high, and is it a sustainable level that we are at, or it's like last time which he mentioned, that we are here, from here again the slide back to 7,500, 8,000, and then we keep rotating around over here. My point of view here is that we are on a much steadier wicket. I will also, of course, include some of the key problems that are still not addressed internally by India, and we can face some problems because of that. But still, why do I think that we are on a steadier, long-term, structural transformation? Quickly, I will cover on that. So we believe that the reforms this time, a number of that which Mr. Thukral mentioned, including demonetization and GST, etc., are transformational. And they're not just, one incremental step. They are cultural also. And it will lead us to a complete virtuous cycle. How a virtuous cycle? Inside statistics, I am not mentioning. But I'm just trying to cover one point here. That whenever we used to meet over so many years, any corporate, mid-size, the first advice that we used to give is, in last 15, 20 years, keep showing proper profits. As you show profits in your book, your ability to draw funds from banks, financial investors increases. The thing which was available to corporates, I think over next 5 years, will be available to individuals which were not in the net of the financial services industry only, be it by banks, be it by NBFCs, and with simultaneously digitization happening, increasing the reach of all the financial institutions. A simple salon owner also, as he starts accepting money by credit cards, he will start showing in his monthly bank statement increasing or steady revenue, which can lead him to one of the NBFCs or financial institution lending him and thereby increasing his power of growth and consumption. So one of the key things which I think which is going to happen apart from huge growth in infrastructure and so on and so forth is consumption. And that consumption-led growth itself will help us in increasing our corporate earnings. So some of you who are very familiar with the markets know that the biggest complaint the bears on the street have been telling is there are no earnings growth. Last 3 years, the earnings have been flat. Markets are going up. So markets are at a much higher multiple than it should have been at this time looking at the earnings growth. The low earnings growth, the low credit growth in the system, the banks in the heydays of 2003 to 2008 used to have something like 15, 18 and 20% credit growth. Today that credit growth has come down to just 5 to 6%, which means there is no more demand. Which segment which is growing within this credit growth is just retail. The private sector spending is not growing at all. So we are saying that knowing this as a key fact, which is still not been sorted out, the underlying reason is still the capacity utilization broadly of the Indian industry is about 65-70%. It's only when you start hitting 75-80% that you start planning your next round of investments. Are we going to go there? Or because of so many reasons, be it of imports, be it of low domestic demand, that the utilization will not increase over next 3 years. So let me just take up a few things which I believe, while the government has done a lot of things apparently for poor, they've also given a lot of heed to the industry. Starting with the coal auction and iron ore streamlining. Because if you remember, iron ore industry was stuck. There was no production happening. That mess has been sorted out. On the top of it, we gave minimum economic price to steel industry. With that, most of the steel plants now are able to operate at a much better utilization and are starting to earn profits. Same has happened with sugar industry. Sugar industry was in complete doldrums. They were not even able to pay to the farmers. So the whole chain was impacted till the farm. With, of course, slightly better realizations and an intervention through little credit, that industry has also been taken out. He just mentioned about textile. Textile, they got additional benefit of about 3.9% in interest subvention, because of which now we are more competitive to compete with China in global export markets. Smaller industries also, for example, seamless tubes and pipes industry. We were getting imports at 25% below our cost of production, and that's how the utilization of the industry had just gone down to about 15-16%. We have recently, in last 2 months, come up with a 5-year structure of minimum import price, which now makes us believe that the industry will bounce back to 75 to 80% utilization, because we are importing 60% of our need. There is a domestic demand, but there was no support. So while world is going towards a bit of protectionism, I believe that we are also very watchful, vigilant as a country to give the required protection to our own industry. And with that, one of the key reasons or problems which we faced was our entire banking industry was saddled with bad assets. One on infrastructure side, the other on the industry side. And while the overall income of the banks were increasing, their provisions were increasing manifold, leading to reduction in their profits. But as one by one industries come out of their problems, it's very much possible that the banks, which reflects the overall economy in their balance sheet, starts bouncing back on their health and the health of their asset quality. So one of the key things which we think the catalyst for earnings growth will be operating leverage, which means when you don't invest more, but the same plant or the same machinery starts making more, it hugely reflects in your bottom line. Next, of course, is market share gain. As what has been mentioned time and again, GST is one of the most important reforms in the decade, but which creates a level playing field. A level playing field between an organized and unorganized, and you cannot give substandard quality by not paying tax. If you start paying tax, a lot of industries within domestic, plywood industry, tiles industry, auto, ancillary industry, and many more will start coming into level playing. They will start grabbing market share. They will have more than market growth, and any which way, they are better quality, so both in terms will benefit. And the third most important is we have gone through a period of last, you can say, 5 years or more, where the cost of capital was very high. Interest rates were so high that that itself was a big deterrent. With the reduction in interest rate and final pass through to the industry, the cost of capital will come down. Industry will A, start making money, B, paying less interest, and in turn showing much better profitability and ability to repay to banks. With this cycle turning, we believe that the key to any market sustenance and performance over medium term, that's the earnings growth in the period 18, 19, 20, that is the 3 years, will start coming back and will keep surprising us. Last 3 to 4 financial years, it has been completely evading us. Starting with a complete commodity collapse, where a large oil and steel companies started showing stock losses. Further, reflecting into banks' balance sheet by way of huge provisions and NPAs. So their profitability got impacted. And then we also had the demonetization. So the final season, when with very good monsoon, we were expecting good numbers to turn out. We have been put behind a bit, but once again it lays the stage for a better tomorrow. So if you just see, we believe that the largest weightage in the Nifty, I believe this is a Nifty Millionaire Club, so they better know how is the composition of Nifty is. The largest weightage in the Nifty is of banking and financial, almost around 30%. Within that, some of the large private sector and the largest public sector banks had a major issue with their profitability. If they just come back a bit, it will show a good 30-35% bottom line growth in that sector. Now, all that accumulating into the Nifty EPS of closer to 500. In case we see how is that Nifty valued, is it very high compared to our last 10 years historic valuation? The chart shows that we are not in a territory which is seen as a bubble territory or a territory where there is huge risk. 5 to 7% correction in a strong, in a rising markets are always welcome to accommodate new players, new investors, or to make the base sound. And that cannot be ruled out. But this shows that we are not in any major bubble territory as of now. And there are a lot of levers in the economy, macro being stable, for the overall earnings growth and the corporate earnings to grow. The key risk, if at all, are the volatility which keeps coming because of some or other global events. And the two global things to watch for could be of course, China, because being one of the largest economy and going through a huge slowdown, the fear of a hard landing always keeps a question mark at the back of our mind. And the second is also mentioned, a lot of political action is set for Europe this year, including in Germany, France, and that may keep those opportunities of huge volatility in our structurally good story, which is what the base has been created. Also, a GST transition can lead to a bit of adjustment, slowdown, and the earnings for 1 or 2 quarters may still take time before they go into a very smooth growth territory. Some of the themes which we as a research house has been liking are, of course, in and around domestic consumption. We think that, as mentioned by Mr. Thupral, a lot of young and working class population now enabled by opportunities of earnings as well as loan or the borrowing will have huge impetus for domestic consumption. Of course, GST will give a shift from unorganized to organized. Affordable housing being the key theme, both the financiers as well as, I believe, the constructor, where nobody looks at the real estate stock at the moment, but I feel over the next 2 years, they will also come back to life. Defense has taken a lot of time, despite the promise of Make in India. But once again, it is at a stage where action will be seen over the next 2-3 years, and first action will be in the order books, which is what market will start believing it a little more strongly. So defense also, agri reforms, and last but not the least, lifestyle. Because of the increasing reach of media, be it through digital mediums or otherwise, the lifestyle related sectors and the urge will continue to be one of the very dominant sector and growth arena. Very briefly, with all the due disclosures, that these are some of our house recommendations and picked up based on the themes that we think are going to play out over next couple of years and more. We have been talking about it. My house, my team, and my clients would be invested in some of these stocks, so please take care of the disclosures. But just to touch upon some of these are some of the stories which are structural or sustainable, like Britannia, where the actual selling points in India for retail is about 4.5 million. They have touched close to about 1.5, 1.6, and they aggressively plan to increase their distribution network in the heart of India, which is north and central India, which is where we think they will keep gaining market share. So we think structurally it's a very good story. This is one of the few food items which is available at 2 rupees, 5 rupees, 3 rupees price point also. So which is where it will keep having a lot of increase in volume driven increase in demand and their earnings. Of course, there is this Jindal Steel and Power, which has gone through a huge rough patch in last 5 years. Capacities were there, debt got accumulated, but they could not quite produce enough and on the production earn enough. Now with rising production and domestic demand, as also better prices, we think it will stage a smart turnaround in their earnings and numbers. SBI, PSU Bank, all are frowned upon this, and everybody swears by private banks. We also love private bank. HDFC Bank and Kotak Bank are amongst our top picks, but we think that at this point of time, the kind of lead that even SBI being a PSU has taken in digitization, and the fact that they are available at a very competitive valuation compared to the kind of subsidiary and value that they have created, they will come out of this little asset quality issues sooner. And as we resolve that as a country, they will be one of the big beneficiaries of that. Larsen, of course, is one of the key infrastructure play, and in defense also, they stand a very good chance of getting good growth in orders and execution. Some of the other in mid-caps that we touch upon, Rallis, a very well-known name from the house of Tatas, but in the case of last year's monsoon, and as we expect the monsoon even this year is predicted to be reasonably good because of the base level in water, it's a zero net cash company with 20% plus ROE, return on equity, and 20% plus growth. So we think that this kind of combinations, when companies start throwing free cash and still grow, are ones which markets and investors really start liking it a lot. Thyrocare is a very new name. I don't know how many of you all are aware in terms of its internals, but this is one of diagnostic industries, one which we think will have huge growth, not for 1 year, 3 years, but we believe for more than a decade they will continue to grow as a segment and industry by more than 20 to 25%. And this is this company sets the barometer in terms of cost and price in the industry. So they are the cost leaders, and they have created a model which is where they have been giving these services at a much affordable price. The company's stated policy is that apart from capex, which cannot be more than 30 to 40% of their net earnings, they will distribute balance as dividend. So I think these kind of, once again, companies which have huge sustainable growth and shareholder-friendly policies will continue to be in favor. VRL Logistics is one of the companies which is into the segment of logistics, and because of GST, we believe their efficiencies will improve a lot. And once again, the move from unorganized to organized will benefit. These are the few which I picked up out of our research. I hope this is of use, and once again I request, please take all this with a disclaimer that my house, as a PL as a house, my investors and myself can have investments in this. Thank you so much.
Get rich with CNBC TV18. Financial partner AxisDirect.
Financial partner AxisDirect. Simple है.